TJ the Wheel Deal coming at you live. It is Tuesday, technically speaking, with UZI Options, July the 15th, 10:23 a.m. Sorry, I'm running a little late. I was setting up the workers in the back. We're doing the new fence. UZI, how you been, my man? My chair, I'm having an issue with the arm of my chair. So I'm going to do a little construction project. Tell the audience how you've been doing.
Hey everybody, welcome to TJ's live weekly show, and happy to be here again and talk about some of the positions that he's got and some of the things we're looking at. Hope you're all having a good trading week. Market's down today, but don't let that get you down. I mean, it's such a resilient market right now. It's real strong. We have a number of stocks that TJ wants to talk about, but if you have any questions on something you're looking at and we can get to it, go ahead and post it. We'll try. Other than that, sit back, enjoy the show. Maybe you catch something you never learned before, maybe on some technical analysis. Maybe you'll see something that rings a bell in your own head, and you can start to use it in your own trading.
Agreed. And real quickly, guys, tomorrow UZI is doing a webinar at 8 p.m. Eastern, so 7 Central, 6 Pacific, 5 Pacific. And I guess it'll be earnings trades. I guess UZI specializes in earnings trades. They had 56 out of 57 winners, so tune in for that. If I'm available, I'm going to tune in as well. So anyway, without further ado, let's get into it. Let me show y'all the portfolio and how it's doing today. I haven't really looked at it much today. I just made a couple of moves. So is the portfolio up there, UZI?
It is. Yep.
Okay, awesome. So up 22 for the day, just doing featured portfolio today and Sun's account, because the Sun's account is starting to take off a little bit. And so year to date is 178, up 2.2 million on Robinhood. So it's been a banner year so far. And then on the little account, we only got 2 positions, 70 and 120 on the short strangle on Hood, up already 1,200 on it. And then I got a big short strangle on SoFi at 20 and 24, up $2,000 on it. Collectively still down on SoFi because I took some losses on Leaps. But this portfolio is just at 86,000 net liquidation value now, which is pretty cool. And we've got 26,400 in extrinsic value. So if I can hold on for another 30 days, we should be well over 100,000, provided that Hood holds up and SoFi holds up. If not, I'll have to go to the next cycle. So that's the beautiful thing about selling strangles, is you can accurately predict and quantify what your net liquidation is going to be if you wrote it out to expiration.
Yep.
You don't have any shift. You're just like, this is what I have in the options. This is what they're worth. And if it goes from this side of the ledger to this side of the ledger, this is how much the account's going to be worth. And that is what I like about it. So I'm showing y'all that, yes, it's a little bit riskier for a lot of people's appetites. But if you know how to manage, and if you don't go crazy, you leave enough buying power on the sidelines, you can have these accounts playing a lot bigger than they are. And you can still make some crazy premiums on these accounts, but you got to be careful. The jockey is very, very important in this scenario. Don't just focus on your horse. That's a stop. You got to focus on you. What's in between the ears? How are you going to manage this trade? How are you going to deal with the emotions of the highs and the lows? All of those things. When are you going to lock in your profit? Reposition yourself for a better opportunity? All of those things. Management is an art form, guys. It's not a science. So anyway, let's get into the big account. A couple of featured positions. We got new position in Oscar, already up 7,700 on it, 33%. Short strangle is 1250 and 8. For those of you all that are newer to the short strangle world, what does that mean? It's just when you sell a short put and a short call, or in other terms, a cash secured put and a covered call, except it's not secured, it's naked. So, but it functions the exact same way. So it's an obligation to buy Oscar at 1250, and it's an obligation to sell Oscar at 18. So it becomes a sweet spot. Your sweet spot is the point between the two strikes, the short put strike and the short call strike. So it's kind of like a goalpost. So then to the left of the goalpost is going to be in the money on the short put. To the right of the goalpost is going to be in the money on the short call. So you want to be out of the money. Out of the money is in between the two goalposts. That's a sweet spot trade. So that's going on there. Hood is 70 and 120. I don't even look at that one because that one's so easy to manage. NVIDIA caused a little bit of problems because NVIDIA potentially gained another $20 billion in revenue if they're able to ship some chips to China again, right? So what I did is I rolled the short put up to bring in some more credits, and now we're sitting on 150 and 180 on the strangle. So I narrowed the strangle up a little bit more to get more delta neutral. On Amazon, 210 and 230. These are all 31 days out. On PayPal, sitting at 67.50 and 82.50. And you're going to see a common theme here. Everything's in the sweet spot. In phase, a very, very tight strangle, 40 and 45. I am looking to roll and expand on this one. I like to get to like 38 and 48 before earnings happens. That way I have just a little bit more flexibility there. But again, these are all trades with the exception of Oscar that I want to be in at least till the end of the year. Palantir is another sweet spot trade, 130 and 150. This one started out at 115, but as Palantir kept inching its way up, I started increasing the strike price on the puts to bring in more credits, but I've kept the 155 where it is. After this run that Palantir's been on and the 60 billion with President Trump and all this other stuff going into AI, I may consider going up to 160 or 165 on the next cycle on the short calls, and maybe going back down to like 120 on the short put. So when I expand, I want to roll, go to the next cycle, but I'm going to try to gut it out. I'm going to try to stay in this trade until we get closer to 21 days to expiration. Apple's a new trade, 195 and 230. Absolute easy money play. This is probably the easiest trade that I have on the books right now. This one in Hood in my mind. EOSC is a new one, 4 and 6. We're kind of in the middle. We're losing a little bit on paper because the stock went up like 15% yesterday. So the short call is feeling that pressure, and I'm not making enough money up on the short put. So it tells us that we're not really delta neutral there. Google is 160 and 200, another sleep easy trade in my mind. Don't have to do a whole lot there, already up 6,100. I am showing a loss year to date on Google because I had a losing trade earlier on. HIMS is another sweet spot trade that I don't look at often, 40 and 70. And it is sitting comfortably at 51.59, up 33,000 on that particular position, 38,000 overall year to date, and everything else is in the distance. So, UZI, which one would you like to talk about? And we can pull up the chart.
Let's do Apple, man. That's your newest one, I think, and I'm looking at it right now on the chart. And strangle looks beautiful. I mean, that's a
okay.
Nice
So let's do that. So we're gonna go Apple. You already got the prices and everything.
I do. Yep. I like them.
So
I like
awesome.
those.
So let me know when you're ready to present, and I'll put it on here.
Okay. Yep. Let me just pull up the share screen.
What's going on, Mr. G? Let me check in with my WhatsApp group here. Let them know that I'm live.
All right. There it is.
Okay, there's live. Okay, here we go. So what's going on with Apple?
Just move my screen over.
160 and 200. You know, when I put this trade on, I gave it a B plus because there's not a huge catalyst on the horizon for the upside, and it's Apple, right? It's Apple. Now I don't think. Oh, so this is Google. I'm sorry, this is Google.
Oh, that's Google. Sorry. Hang on. It switched.
Yeah, there.
By the way, what was the price of when you actually put it on? Do you recall? Just curious.
What was the what? I'm sorry.
What was the share price when you put it on? Well, it couldn't have been too much different than where it is now. You put it on a couple days ago.
It was like between 205 and 210.
Nice. Okay.
Yeah, and I just 195 was just a level that I'm actually comfortable owning those shares if necessary. So whenever you're going to put on a strangle and you're not feeling a pinch already psychologically, it's almost like kind of like semi-salivating because I don't own any shares in the portfolio right now. So I'm like semi-salivating to own some shares of Apple at 195, write them up 10 or 15 points and be done with it because I've already decided I don't want to own shares anymore. But I don't mind swing trading here and there when the opportunity presents itself. And then I looked at just the fundamental landscape. I didn't even glance at the chart too much. But I was like, what's going to take Apple back up to 230 in the next 31 days? And I couldn't think of anything. But that being said, even if it goes to 240, 250, it's a very manageable strangle for me because I already started off pretty wide. And I don't mind widening up on the next cycle another 10 or 15 points. And I feel like I'm strangling Apple. Apple's not strangling me. It's not strangling my thoughts. It's not strangling anything. I feel like I'm going to make $500,000 on Apple, and I'm not going to have a whole lot of stress doing that. So Apple doesn't come with that type of volatility, first of all. The premiums, that being said, aren't as great either, but it's Apple. So I cannot stress that enough. I was looking for a low stress, easy money play that was still given a decent risk reward situation. So what's the chart say, Uzi? I haven't even looked at it, to be honest with you.
Yeah, I see all kind of things going on here, man. I'll tell you, it's like remember that movie where the person like had this sixth sense and they saw things, so they saw dead people.
I see dead people, kid. Yeah.
I see a whole bunch of going on here. So first off the bat, I see you definitely skewed it a little bit safer to the upside. You know, I can see you have a lower delta on your put, cash your put, because obviously you don't mind owning it at 195. So that was smart. You know, skew it a little bit, give yourself a little extra room on top on the upside. That's great. I see that we have the 200-day moving average, which is in this brown dotted line. You're well above that. So again, if price should jump up on earnings, which are coming up on the 31st, you've got at least that big line of protection. I call that a bunch of linebackers right there waiting to take on the price as it tries to get through it. Now, that's being said, you know, assuming that, you know, the price wouldn't gap up through that, because that's always the risk when we have an earnings event, is we could get a gap through a specific area. But between now and then, I don't see that happening. So I do see a beautiful cup and handle, though. I'll see if my drawing tool works, and that would be a bullish pattern. I'm going to draw it so that people can see it if they don't see it already. We've got a nice cup here, and then we're in the handle. So we're in the handle right here. And, you know, typically 90+% of these, if you're in an uptrend, resolve to the upside. Now, the question becomes, is Apple in an uptrend right now? And the answer that I would give, in my opinion, is no. I mean, Apple is still in a downtrend, and we know that because let me just get my drawing tool, is, you know, the long-term trend right now, longer-term trend, not long-term forever, but the longer-term trend is down, and here it is. So price to get even to that 200-day moving average is going to need to get over this descending trend line, and it's significant, but it needs another touch point. So it's got 2 touch points, and typically we want to see 2 or more, which would be, you know, obviously 3. We haven't had that yet. So I would think that Apple is in its next, you know, few days to weeks is going to attempt a move higher, because the setup that is currently in the shorter term trend is a bullish one. We have coming off the lows.
Right.
We have this trend line here. So we have a triangle. Yep. You always have triangles. You always have channels. You have to see them and draw them. And we have actually more touch points along this shorter term uptrend. We have about, let's call it 4 or 5. So this is a strong trend intact, and they're going to meet each other over here near the apex. That's where you get these 2 trend lines that touch. That's the apex. So between now and, let's say, isn't it funny? Isn't it? Now look at this. Isn't that amazing? This apex coincides pretty much exactly with earnings day. Isn't that crazy, right? So those who don't believe in trend lines, maybe you want to go back and read about trend lines, because they do work and they are meaningful. So that all said, so we're going to probably meander about, and that could be the catalyst that drives us right through out of this triangle. Now, it could go either way. This happens to be a symmetrical triangle, which means that there is no skew toward, let's say, so if we had a horizontal line like this, and then we had an uptrend line coming like that, that's an ascending triangle, okay? And vice versa. If we had a trend line below and we're coming down like this with the other line, trend line, that's a descending. When you have equal lines in this particular fashion, that's called a symmetrical. And those typically can go either way. So that's usually a 50-50 with a little bit of skew toward the downside in this case, because we're coming from the higher time frame being down. So the higher time frame being down, and now we form this triangle. The higher odds, not great, but a little bit of a higher odds that we break to the downside. Again, that's not a big deal for this position that TJ has, because he's willing to take possession at 195. If it breaks to the upside though, or starts to move up, again, we do have the trend line resistance, and we have the 200-day moving average resistance, which is huge. And not only that, let me just erase what's going on here. I know I'm talking fast and everything, but I want to get much in as we can today. We also have, from previous price trading, we have an area over here of prior resistance. So you got the 200-day moving average, and you've got a cluster area here, which we call a pivot, where it pivoted from going up to down, where price will run into a little bit of difficulty, hopefully right before TJ's 230 strike on the call, if it gets to that level. So what I see potential for bullishness, okay? Also potential for bearishness, because, like TJ said, trading is an art, and so is technical analysis. But the most important thing is, in a case like this, when you have a potential to get challenged, you have to have your plan ready on how you're going to handle it in case it does move up toward that area. So,
right.
To protect that 230, we have a cluster over here of resistance. We have the 200-day moving average. So the strike up above looks pretty safe. And of course, the one below is not a problem, because if you're willing to take ownership at your cash secured price level, then that shouldn't ever be an issue. And you can roll it if you have to.
Right.
But I do see a nice bullish cup and handle forming. And if earnings go well, it might make a run toward that 230. Again, I do like the strikes though. From here, you're at a great distance away. Probably deltas at around 18 or 20. From just eyeballing it, and yeah, I like this trade.
Yeah, let me pull up and then tell you the deltas real quick.
Now, just one more thing. If one of you, if traders out there, let's say you like this type of trade, but you don't have the funds, or you're afraid of going naked with calls, all you need to do is take TJ's trade here and then buy yourself a protected call on the upside. And if they have 2.5 wide strikes, you buy the 232.5, or if they don't, you just buy the 235, and now you're protected. So you can do that too.
So you what he's saying is you turn it into a call credit spread.
Yep.
On the upside, and you can turn it into a put credit spread on the downside, and that would form what's called the infamous iron condor.
Yep.
So if you want a covered strangle that isn't really covered, but it has the same protection as owning the shares already, you can sell iron condors, and that is a much safer way to do what I'm doing, because anytime you get in trouble on a short strangle, the go-to move to get out of trouble is to turn it into an iron condor. So a lot of times people just start there.
Right.
This is where it's going. I'm not going to make as much, but I'm not going to lose my shirt either.
Exactly. And that's the beauty. That's when you combine calls and puts, you get all these different strategies, and they're not really all that difficult to grasp. Once if you put them together slowly, one by one, you can, like you just did, you go from a strangle to an iron condor in a split second, and you're protected on both ends.
Yeah. I always tell people there's only 4 things you can do with options. You can sell calls, you can sell puts, you can buy calls, buy puts. Everything else is a combination of those strategies. So I always say, master the basics, master selling calls and buying calls, master selling puts and buying puts. And as far as just how they work, the components of it, and how the Greeks affect it, because on some you're going to be short theta, on some you're going to be long theta, on some you're going to be short delta, you're going to be long delta, you're going to be short Vega, you're going to be long Vega. understand how gamma comes into play because it's the accelerator to your delta. So you need to understand the yin and the yang with these trades. Like for every cause, there's an effect, right? Like these things are all intertwined. It's like I always say, it's the little options is a lot like the little song that we learned in school. The neck bone, the backbone, and the hip bones all connected. It's all connected, right? So that little song that we learned and obviously forgot, but I learned it for a short time when I was in kindergarten, first grade. That is what options is. Those is what the Greeks and options are. It's all connected. It's all interwoven. It's interconnected. It's interdependent. And you got to learn those Greeks backwards, forwards, left, and right in order to be comfortable buying and selling options. Now, I obviously focus more on selling options on this channel because I'm a premium collector. I'm a theta collector. I think it looks good. Want to move on to another one? I don't think there's a whole lot to do with Apple there. I think it's a good trade. I would like to do another one. Have you charted Oscar before or no?
Sure, man. Yeah, we were in that thing numerous times. Let me get all this off there. We've been looking at this one ad nauseum for sure.
Okay, so 12.50 on the put, 18 on the call. This is a shorter expiration though. This is August the 1st. So this was what I call anything south of 21 days. When I sell a put or a call 21 days to expiration or less, I call it a shit or get off the pot trade. Because you're gonna know pretty quickly whether or not this thing's going for you or against you. So 12.50 on the put, 18 on the call, 17 days to expiration. We're sitting on 30% profit right now, 33 on the put, 27 on the call. As far as percentage goes, there's still 16,250 in extrinsic value, up 7,000 on the trade. I'm looking at the deltas as well. I'm sitting on 15 delta on the put and 22 delta on the call. So it's pretty delta neutral as well. This is a pretty sleep easy trade right now. When I put the trade on, I was going after a $10,000 bill. It got as close as 9,000 this morning, but then Oscar started going up. So obviously it started putting a little bit of pressure on the short call side. So that's cutting into the profit. So I just have to settle for a theta collection, and I'm collecting about $1,200 a day on this position. So probably by the end of the week, I could get to that $10,000 profit if Oscar fluctuates, 50 cents up or down.
Yeah, I like it. I mean, Oscar has been, a great stock for the longs who were in it, building their position down over here. Then you had the run, the pullback, and then that big run up. The news killed it, but now it's, when you have a shocking news event like they had, we're out of nowhere. I think it was a downgrade, and something came out with their fundamentals or what they, what in their line of work, something is going to be affected by. I believe
it wasn't. It didn't have to do with like the Medicaid fraud with United Health, and somehow these guys were like collateral damage. I haven't followed it. I haven't listened to one earnings report. I know it's like artificial intelligence for healthcare. That's like literally all I know about Oscar, and that people started talking about it on X and YouTube pretty recently.
Yeah, and so it's caught a lot of people bag holding up here, right? But you do have a lot of people that have been following this name that wanted to get in. So you got this little bit of tug of war going where the longs are happy because they're able to get in, but they're not as powerful right now because, again, we're looking at where it fell out of the sky and landed here, okay? So if that was it and it was all said and done and the smoke was just a little bit of smoke and it's going to go away, it would have rounded and been caught by the 50-day moving average in yellow and turned back up. So there are some clear sellers that wanted out of this thing who got caught holding the bag. That's why it has not been able to rally and get back above both the 50 and the 200-day moving averages. So right now, if someone's long, this has a real big challenge to try to get up and through there. It's going to take some real good news now to as an antidote to get through those levels. Now, to the downside, the problem with a chart like this is when the bag holders begin to get frustrated and they don't see that the price is going to recover anytime soon, they don't want to sit in dead money, right? Money in a position that they don't want to sit in. So it could start to see some extra selling pressure. Now, the first thing I'm seeing right off the bat is what's called a bear flag, and these occur after a big dump sell off, whatever you want to call it, reversal pattern. Okay, you have a move down. Okay, some people call it an H pattern. You have a move down. You have this general trend, like in a channel here, a channel trending slightly higher on decreasing volume down here. So decreasing volume means the buyers are not stepping up. Okay, as it's trickling higher, buying is drying up, and what typically happens is now you get this move down. Okay, that's what's called the H pattern, down, up a little bit, and an H. I just call this is a bear flag. And then if this is a true bear flag and it works out to fruition, then we generally take the move that it started from up here down to here. We measure that, okay? So we can kind of take this one, we can duplicate it, okay? And then we can kind of drag it this way, put it right around here, and we can see that this move could go. Let me just erase this one here. This move could get it below 12.5, but again, TJ's strikes. His expiry, I should say, is only about 11. Was it 11 days or so? 12 days?
From now, it's August 1st. So
August 1st. Okay, so another 2 weeks, whatever. It's very short term. If this was a 30
17 days to expiration. Truth be told, if I can get a 10,000 in profit, I'll take it off by Friday.
Yeah, if you get to your profit target.
This is literally a cash grab. I'd be more comfortable in Oscar if it wasn't in what I call no man's land. I would be more comfortable with Oscar if it was above the 200-day, or I'd be more comfortable with Oscar if it was trading at like $10, because then I could be super aggressive with the put, because now I want to own the shares, and I'd probably just run short puts for a while, let it run up, and then put my short calls up at like 20 or 22, because stock prices have a memory sometimes, and there's a lot of people that are going to want it back up at that $20 range with their bag holding, like UZI was saying.
It does have some support from a prior swing low here, and that kind of lines up with the support from back all over here. So, it would take a lot to get through these areas I just said, but that's how that bear flag could work out. But yeah, that's what I'm seeing off the bat. Now, let me just erase this so I can keep it nice and neat. Let me erase this here. Now, the fact that the moving averages are right above, okay, is going to keep it in this area, okay. But you also have the price of you have support over here sitting as well, so you have horizontal support. So it's got a lot of confluence going on. It's in a bear flag. You do have an area of this was major support, which it created what's called a little short double bottom here, which is where it was propelled up and made these recent swing highs. So I believe that this is going to be a theta decay type of a trade, meaning it's not going to go anywhere fast. Strangles are good. Iron condors are good. This is not an area where you want to be buying calls or puts unless you go further out. Give it time. You want to give this type of a trade time if you're just going to be going directional. This is a classic setup for premium selling. Again, strangles, iron condors. You could even do a jade lizard, but I would stick with the first two. That's why this is a great trade, and TJ's trade looks fairly safe to me. And if it does drop to 12.5, I'm sure it wouldn't be a bad place to own this and wheel out of it and even make more profits.
Yeah, or I can lower the strike to like 11 and make it very attractive, because this company is growing, a mile a minute. So that part's good.
They are. They're fine. Their fundamentals are strong. That's another thing. Their fundamentals, though, are very strong.
Let's look at Hood. I'm still sitting on the same trade. Haven't touched it, dude. 70 on the put, 120 on the call. Been collecting theta. 53,000 on the trade, 28,000 year to date on Robinhood. There's still $162,500 of extrinsic value. It's 500 contracts. Expiration date is August the 15th. So 31 days to expiration. I'm looking to manage this trade probably next Friday or by next Friday, 21 days to expiration. And the idea is to probably keep it at 70, maybe even increase it to 75 on the put, and probably go as high as 125, 130 on the call, and rolling out another, 30 to 45 days. That's the idea, because Hood Hood's strong. Hood is strong fundamentally. The sentiment is very, very strong. I feel like everybody's forgotten, or a lot of people have forgotten about the GameStop debacle. They've gotten a pass. That was so long ago. And it's funny how the sentiment changes and people make money off the stock, right? So
Yeah.
I just think that this strangle, this was again my easy play of the day at the time. Sound like one of those bookies touting their service. I do here, but occasionally I put on like a new trade alert on X, and I just saw it, just kind of like before that Palantir was the trade, right? So this is a trade that I still feel very, very good about. I feel like it's a trade that I could do right now and feel pretty damn good about it. What's the chart say, Uzi?
All right. So Hood, we've talked about it a
There's
few
my
times.
feelings, and then there's the chart.
Yes, sir. Yes, sir. So Hood is one that it's been on a tear, like a Palantir in a sense. So yeah, I mean, you can't deny this strong trend. So going right to where it kind of was heading lower. It's just, if that's April 7th. So April 7th day, I take this out of the equation a lot of times, because April 7th was one of those days that it was an extreme day, and it does mess up a lot of charts. So let's just go to, let's say, the next day or two after, and I'll say this is where we kind of began our new uptrend, and there's no doubt that's a beautiful uptrend. And it hasn't had a chance to really come back and touch it. It's been a while. So what does that mean? That means it's strong, but that doesn't mean it's going to keep going up, forever. And I'm not trying to say any negative about the stock. I do believe this is a great stock. But, as these angles begin to increase, the sustainability of that kind of diminishes. Now, as you'll notice here, and I'm not a big convergence guy, because but I am noticing that as price is trending higher, trickling higher, because it's not really jumping, it's trickling. We do have volume that's drying up. To continue going up is going to need volume. We're not getting that right now. So and by the way, the last two times now that they just made an S&P 500 change, Hood was not included. So all the people that have been kind of expecting that, and now that it didn't come to fruition, maybe they're second guessing their, do they want to continue owning this in the anticipation for that, which now they know it is not coming. It didn't come. It may come later on in the year, but for now it didn't come. So are they going to now take a little bit of profits? Because there hasn't been significant profit taking yet. So I'm not trying to put a bear case, but I am trying to say there's a couple
but let's just talk about the fundamentals a little bit. It's an expensive stock.
Yeah.
And it's hard. Like, I don't like comparing it to SoFi. They're different companies, but like you have to pay like 4 or 5 times more for earnings on Hood than you do on SoFi. So it's trading very rich, is what I'm saying. And I think deservedly so to a certain extent. They're growing into other countries. They're going into other countries. They're utilizing tokens. I don't really know how it works. Don't give a shit, to be honest with you. I don't use the platform anymore. I'm one of those that I just need to know that it works. I don't need to know how it works. I'm that guy, right? Show me the baby. Don't walk me through the labor pains. I don't give a shit. So I saw an opportunity. I saw an opportunity to make money. I saw the baby already. They didn't take me through the labor pains. I saw the baby. I squeezed the cheeks, right? We're good. So I think it's going to go up and to the right over time, as long as Bitcoin is pumping, as long as the market's pumping. There's a lot of retail money that's going to be going into Robinhood. There's a huge transfer of wealth. I think Tom Lee called it the Morgan Stanley of the modern day, right? It was Mid did a real awesome interview with Tom Lee. I caught about half of it. Looked really good. I just haven't taken the right dump yet, so I can watch the other half because it was a really good interview. But I caught that he said that this was like the Morgan Stanley of the new generation, right? And I kind of believe that. Like I believe that there's a lot of people that love being on Hood. They love being part of the community, the user interface. They don't need all this fancy stuff that Tasty Trade offers or Thinkorswim offers. They don't give a shit about that. They want to be trading on the cool platform, and Robinhood's the cool platform. I call it the iPhone. It's the Apple of trading, right? Because it's very easy to make a trade on there. So I think it's awesome, but it's rich. It's rich. So I do think that if for whatever reasons all of 2026 goes by and they do not get into the S&P, I do think that it could retrace to that $70 level one more time. Like I do think that happens or can happen, but that also really wouldn't scare me. That's what I love about this strangle so much, because I don't think there's a whole lot of risk to the upside, but I can also manage it. Because again, I'm trying to be in this trade at least toward the end of the year, because I'm not done making money with Hood. But at the same time, if it were to go to 70, now I'm getting low key pretty excited, because I think that there's a pretty good value proposition there for Hood at $70 a share.
Oh yeah, no. Listen. If it gets to 70, I'm a buyer too. I mean, I'm a buyer for the long term at that level for sure, with some leaps of some kind, and that is an area that I do believe when it does begin to put. So nothing goes up forever or down forever, and I'm not saying the stock should fall or will fall, but I do think that technically it's getting a little bit to the point where it needs to re-energize its fuel cells, right? And to do that, it just needs a pullback. It hasn't really had a pullback. Maybe this was a small pullback here. It went from like 100 down to maybe 91. But this is all we're just talking technicals. I think your strikes are fine, especially since you don't really have earnings until you get to the end of the month. Right. At that point, I do believe that's going to drive it, forcefully higher, or maybe create that pullback that it really does need. It needs to come back. It comes back anytime you get too far away from your medium term, meaning like the 20-day moving average, 21. Forget about the 50, because a lot of times you can stay much higher elevated than the 50 moving average. But it does need to touch, and it's almost like one of those, you've been on the road for a while, you got to come back and see your wife and your kids and family. You got to come back and it's got to touch come back and greet the 21-day moving average. It hasn't done it in a while. These are kind of close. I just think that's kind of like overdue, and that's going to be the next, especially since the news hasn't been rewarding is with the S&P. And there's been a little bit of stuff coming out. The Florida Attorney General was talking to them about maybe their token stuff or whatever in other countries. So there's been a little bit of negative news bites coming out. And whenever you see that type of stuff hitting now, just a little bit of negativity, a little bit of they nibble you here and there. It's going to affect the price a little bit, and I just think a pullback to the 21 would be nice. Now that brings it down to about the $90 level, let's call it, well above your 70 strike. So I do think your strikes are good. And yeah, I mean, another strangle that's just, a nice distance away. Nothing really in the way that could cause it to make a jump that much. Look, if they would have gotten included yesterday instead of TTD, then maybe it would have made a run, but didn't happen.
That's a fact. You got time for one more?
Yeah, but one thing I do want to point out, and we talked about this last time, was the fact that it is in overbought territory. The RSI is it's screaming. It's screaming. It just needs to come down a little bit, bring it down to the 60 level or so. And that's healthy for the bulls. If you really want to own this stock for the long term, you want to see pullbacks and then move back in that uptrend.
Yeah, I would think it would be healthy for the stock if it would go to $80 and then work its way back up. It forms a stronger foundation. So,
yep. What's the next one you got, TJ?
I've got one more. Let me look at it. Palantir.
All right.
Palantir. So now I'm sitting at 130 and 155. I've adjusted my short strikes. I started at 115 on the short puts, and now I'm all the way up to 130, picking up credits, but I haven't touched the 155. It is under duress. but it's not that stressful to me, to be honest. Actually, it's not stressful at all. So it is 31 days out, 130 on the put, 155 on the call. The idea is to try to gut it out to next Friday and then shoot it out, maybe go back to 120 and maybe at least 160 on the call, 165 on the call. I don't think there's a whole lot of risk to the upside here because Palantir is stretched, to say the least. But there is the $60 billion that Donald Trump spoke about. I didn't listen to it. I haven't had a chance to listen to what Amit had to say about it either, or Palantir bite-sized, or other people that cover Palantir on a daily basis. So I'm uninformed right now, but I do know that fundamentally Palantir's clicking on all cylinders, but it's got a valuation that supports a 50% CAGR. You know what I mean? Like this stock is not cheap by any stretch of the imagination.
No, it's definitely not cheap, but it is it's a Wall Street darling like Hood, and yeah. I mean, look. So let's jump into it. So right off the bat, we've got a few things to just quickly talk about. Now, even though it is in the stratosphere, even though the fundamentals are, they're doing good, but the valuation is kind of off the charts. It hasn't created what Hood has created, and that is an occupation of, let's call it, overbought territory. This is not considered overbought. It's near the 70 level, which is where you start to talk about being overbought, but it's comfortably below in the sense that it could take a run, right? The price could jump, which would bring it that way, but that would be damaging to, let's say, that 155 call, because to get into overbought territory, we're probably talking about 155, 160 on the upside.
Agreed. Yeah.
Yeah. Now, one thing of note is, and again, I'm not a big MACD lover, but I got to bring it up when I see it. So we do have a MACD bull cross a couple days ago on this bullish day right here. So that's a that's a really bullish indicator right there. So that and now not only that, but you do have the histogram, which I look at as well. The histogram, which goes along with the MACD below here, is increasing. These green bars. There's only two of them so far, but that doesn't mean you can't get 3, 4, 5 in a row like you had over here. So what am I saying? MACD is very bullish right now. So MACD is bullish. RSI is not overdone. So that's two things that say it has room to go higher. Great. Another thing I look at is what's called the TTM squeeze, when we've gotten real tight on price consolidation and the Bollinger Bands. And that coincides with this tightening area right here. Yeah. And what we had when it came out of the squeeze, which are the red dots, is a move to the upside indicated by these blue bars, and they're increasing as well. So this is almost like a MACD indicator in a sense, where you're getting increasing bars on the way up. That's very bullish. So right now we've got more bullishness than bearishness, or even neutrality. This is not even neutral. This is bullishness. We have the price just recently did what I've been talking about with Hood. It should come back and, let's say, greet the family, the moving averages. It did, and now it's energized for another move up. It's already over prior horizontal well above this resistance area. Okay, and since then it's pulled back and it's now over and basing above this resistance area. So to be honest, this is one I do see that potentially could challenge your upside, TJ. Now, there's no telling when, obviously, but it's heading there. It's heading there now. It's trickling that way now, and all it needs is a little bit of volume. So we have low volume. Although yesterday was a small increase, today's on the lighter side so far. You're gonna want to see volume dry up and maybe price start to come back a little bit and retest this trend line that it just kind of broke over, resistance line. Yeah. If anything positive,
I saw the same thing yesterday, and that's why I started increasing my strike prices. I was at 120. I went to 125, went to 130. So I'm grabbing all of those premiums, and eventually I could even turn it into a straddle like if it keeps going up, before I roll out, the first thing that I do is I keep increasing the strike prices. So I could have a 155 put and a 155 call, and then just wait a week or two and then roll it out. And then I may be sitting at 145 and 175 on the next cycle. So
Right.
that's the
That's
beautiful
right. You
thing,
can
knowing how to manage strangles. You know what I mean?
definitely, yeah, you could definitely turn it right into a straddle, and that would increase. You'd bring in a whole bunch of more premium, and it would offset anything that you might pay to have to roll this 155. Now,
It's a game of credits. It's a game of credits and debits at the end of the day for me. So
I just stretched this out so we could kind of see this a little bit better, because this bubble, I can't really remove this bubble, this 150 bubble 62. That's part of a Thinkorswim feature.
Yeah.
I can't remove it, but I wanted to be able to expose this line. So if we draw a top to top trend line, it's pretty cool. Pretty cool how it's amazing how that lines up right with your strike. So if price does start to drift higher, it's going to attempt a break of this trend line above here, which it would be considered a resistance trend line to price. So that is one good thing going for you. Your strike is kind of right near the resistance level to the upside, even though it's in blue sky territory. When we get to blue sky territory, we have to have something to use technically to give it an area where it can come into some type of resistance, and that's how we use these topping trend lines like this. So,
do you want to explain blue sky territory? Because my understanding is those are areas that it hasn't been before. I got to take this. You want to explain that to the audience?
Yeah, sure. So when price is making all-time highs, right? Price has never been to that level before. It's considered to be in areas where it's just blue skies. It's like, you wake up and if you look outside one day and it's just a gorgeous day, there's no clouds, you can see forever. It's blue skies. It's beautiful. So this is in the blue sky territory, meaning it's got really nothing in the way to stop it. This trend line I just drew is something it could run into difficulty. Okay, so that could be headwinds above, but it's in areas that there's nothing to stop it. So picture, if you're a football guy, sports guy, picture a running back who just took the kickoff and he's made it through all of the defenders, right? It's blue skies ahead. He can run, there's nothing in his way. He can keep running. So blue sky means there's no obvious major resistance to worry about other than just profit taking by longs, sellers, meaning short sellers coming in, deciding that they feel it's overvalued or it's reached a certain technical level. Maybe it's a Fibonacci extension level. So, but
it's where I got my saying, may your sky stay blue and your stocks green. Because when you're dealing with blue skies, that typically equals green stocks because there's no resistance up there, guys. Like they got to run into a star or something because this thing, and how long can they run? How irrational can the market stay longer than I can probably say stay sane or solvent? That's the beautiful thing about the strangle is I don't have the emotional, like, oh man, my shares are never land. You know what I'm saying? Like I don't own shares. I'm just managing a goalpost. And that is why I feel like short strangles are made for my genetic makeup. But guys, I got to go get on the construction guys, make sure they're doing what the wife needs them to do. If not, this $11,000 project is going to turn into a $20,000 project because I have to do it over again. So let me go.
Yeah, no, keep an eye on them, man.
Let me go do that. And I got calls starting at 11:30, and I still got to heat up my chicken noodle soup to break my fast this morning. Anyway, UZI, I appreciate you guys so much. Tune into UZI tomorrow. UZI, if you have any room, man, maybe I can join in for 10, 20, 30 minutes. But I got to run.
We're going to try to keep it to 45 minutes to an hour because it can get out of hand. But yeah, man, at the end, sure. Yeah, just show up, TJ. Yep.
TJ, the Wheel Deal, signing off with UZI Options. As always, may your sky stay blue, stock screen. Peace out.
Take care, everybody. Have a good day, everybody. Take care.
Take care, bud.